Disney is one of those companies that I think has a much brighter future than a lot of investors think. And one of the reasons is the company's streaming strategy. And the third prong of the streaming strategy is ESPN. We got details about ESPN going over the top. It's just going to be called the ESPN app. So keeping it simple from a naming perspective, getting rid of all the pluses that are all around the streaming services. But I think this is ultimately going to drive Disney to be one of the biggest streaming services in the world. It is very possible in the next couple of years, Disney generates more revenue from streaming than Netflix does. I'm going to walk through all these numbers. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. Thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at the details of what was announced today as I'm recording. This is from ESPN itself. They're streaming offering a singular brand of ESPN. The headline number is that the unlimited plan is going to be priced at $29.99 per month. The select plan, which is basically going to be the existing ESPN Plus, is going to be $11.99 per month. But during launch, they're going to have an offer where you can get Disney Plus, Hulu, and ESPN. This is the bundle that I think is ultimately what's going to attract the most subscribers. That's going to be $29.99 per month for the first 12 months. I'll get to some of those details because that does include ads and compare that to what the current pricing is. But I think the product itself is pretty compelling. You can see here all the channels, the content from the channels that are going to be included: ESPN, ESPN2, ESPNU, SECN, ESPN News, all of these things. I think all of this is going to kind of fall by the wayside in the future. But the content, NFL, NBA, NHL, MLB, WNBA, UFC, UFL, SEC, ACC, basically everything you could possibly want in sports is going to be on this service in some way, shape, or form. They don't have everything, but they have more than anybody else. So this streaming service, I think, is going to be very compelling for those who have already cut the cord. For those who haven't cut the cord, those customers are going to get access to this product. So that's another thing that is a little bit different than the way that a lot of these streaming services have rolled out in the past, where it was either you get cable or you pay double and get cable and the streaming services, or you cut the cord altogether. This is sort of compelling as a bridge to the streaming future. But the real way to think about this is as a bundle. This is not going to be three separate streaming services. Yes, that is something that customers will be able to buy, but it will make much more sense as a bundle to buy all three of them together. Kind of makes the product veto-proof for households with more than one person. So monthly subscription for ESPN, $29.99. But even after the special deal, Disney Plus, Hulu, and ESPN are going to be $35.99. So for $6, you get Hulu and Disney Plus. And you would get ads on those two. If you want to have no ads, that goes up to $44.99. So now you're getting close to $50 a month for ESPN, but no ads for Disney and Hulu. And this introductory offer, not actually that cheap, $29.99, and that's for the first 12 months, but that's with ads on Disney Plus and Hulu. So it'll be interesting to see what the numbers are. I'll go through how many customers they have for those three streaming services they have right now in just a second. There will also be an annual subscription option, and then ESPN Plus, as it currently exists, will remain in this kind of lower tier at $11.99. Now, the interesting thing from a revenue perspective for Disney is this is $30 a month or so for ESPN, and that's going to be a much higher price point, much more revenue per user than they get for cable. The carriage fees for cable, we don't know exactly what each of those carriage fees are, but the last reported numbers were somewhere around $10, probably a little bit in excess of that right now. So for every cable bill, ESPN is going to get about $10 of that. Once you bundle all the other Disney content, you're probably pushing more closer to $20. But this scenario, they're going to increase that revenue per customer, and Disney is going to keep all of it. That's what ultimately is the most important thing for Disney and for shareholders. It also has the potential to be much bigger. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Let's go through how many subscribers these services have right now, because I think the upside potential is over 100 million subscribers for this new triple play. Right now, you can see here, with this chart, the purple is ESPN Plus. That has 24.1 million subscribers, so paying about $10 per month for that service. Hulu, 54.7 million subscribers, and Disney Plus is obviously the big product at 126 million subscribers. So how many customers are going to be able to be upgraded from Disney Plus to this triple play? That's going to be the big question. Here's a few of the options as they exist today. You can see that Disney Plus and Hulu, this is the basic option. It starts at about $11 per month. Then you can get to the premium product of Disney Plus and Hulu. That's about $20 per month. And this is going to be without ads. So this is where I'm sitting as a customer. I don't want to watch ads on these streaming services. So willing to pay a little bit more there. And then if you add ESPN in, ESPN Plus rather, you're gonna get $26.99 per month. So you push that up to that $45 or so per month to make that actually the real ESPN product. That's where we're gonna be a pretty significant price increase. But if they're able to pull this off, this is gonna be pretty significant for Disney. This is the most recent numbers. This is their quarter ended March 29th. You can see that revenue from the direct-to-consumer segment, $6.1 billion. This currently does not include the sports segment, so ESPN. We'll see how they change the reporting on that in the future. But this is just basically the streaming segment. And that's already pretty comparable or pretty close to Netflix's revenue, $10.5 billion worth of revenue. That was growing at 12.5%. So can Disney get this number up to $9, $10, $11 billion? For context, at $30 per month, that would be 44 million subscribers to add another $4 billion worth of revenue. That's definitely possible when you look at the fact that there are 126 million subscribers for Disney Plus and only 24 million subscribers right now for ESPN Plus. Can they sort of bridge that gap? Can they make this triple play attractive for 50, 60, 70 million people? That I think is really possible. And this could potentially even allow more people to cut the cord. As you think about if your cable bill is $100 per month and what you really want to keep is ESPN, some of your Disney services, maybe you add another streaming service in there like Max, but your streaming bill may be a little bit lower than you're currently paying. And now Disney gets to keep all of that money. So that's really the upside for Disney, is that this becomes a really compelling streaming option. And if it does, if they are able to attract tens of millions more subscribers, this is going to be a flywheel that's going to work for Disney for the long term. Because when the next sports rights come up, they're going to have more subscribers than anybody else. They are going to not only be able to reach more eyeballs, that's something that Sports League want to do, they're also going to be able to write the biggest check. It's really only YouTube or Netflix that are competing with as many eyeballs as ESPN can bring to the table in sports in particular, and that's where the big money is going to be. So as we have rights like the UFC come up, that is going to be something that is under consideration. They've already locked up the NBA. The NFL could potentially have more packages available as well. All those things I think are going to ultimately look very attractive for ESPN if you are a sports league looking to reach the most consumers and generate the most revenue. Now, what I didn't talk about here is the potential for advertising growth. That's going to be another big revenue driver for ESPN with the streaming service. They're going to have the ability to target even more than they have previously. They've got a partnership with the Trade Desk. They already have those relationships with brand advertisers. And on top of that, you have the Bet ESPN revenue that they're getting. So I think a lot of upside here for Disney and for ESPN. Don't be surprised if they report, don't be surprised if the combined entities, all of these streaming services together, start to exceed $10 billion in revenue, potentially as early as next year. I think this is going to be a very popular service, definitely something that I'm going to be subscribing to as soon as it comes out later this year. And if they're able to pull in subscribers, that's going to create those positive effects that's just going to make Disney and their streaming service even stronger. That should ultimately lead to a higher multiple, which is where investors want to be. Right now, the price to earnings multiple is just 19. Enterprise value to sales is just 2.6. So I think a lot to like with Disney stock right now. You got those parks and experiences as a foundation, and this is really the upside for the future. But let me know what you think about ESPN. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.